Johny, let's start with this news out of Remgro, the company planning to sell its 11.8% stake in packaging firm Nampak. The deal potentially worth 1.4 billion rand, and Nampak today closing down almost 6% at 18.15 rand. Can you take us through your thoughts?
Well, basically Remgro did an accelerated book build this morning, so they effectively placed the stock onto the market via one of the brokers. I think that ultimately the stock was placed at around 17.40 rand. Obviously they had it placed at a discount to where the market was trading. It was quite a large stake, as you say, 11.8% of the company. So the stock was obviously weak, but those who picked it up in the book build are still up on the trade.
And I wouldn't like to be investor relations at ABSA today with the furore unfolding around ABSA, the stock being suspended, with the Financial Mail printing the ad, the paid for ad, and it coming out before the JSE sends announcement. The stock was suspended. As I said, it has resumed trade and the numbers are in line with expectations. The trading update we saw last week, headline earnings per share down 4%. Your thoughts again on ABSA?
Yeah, I mean, the results, as you say, weren't a surprise. The surprise were that they were released a couple of hours early. Generally looked better than Nedbank. Nedbank suffered from both margin compression on the top line and their bad debts didn't roll that quickly, whereas ABSA, their margin actually held up very well, actually increased over the period, and their bad debts rolled quite nicely, down to about 1.5% of advances from about 1.7–1.8% last year. So the numbers do look better than Nedbank, but still the bank's struggling to grow. Their bad debt charge was down about 1.1 billion rand, but still headline earnings flat. So that benefit from the bad debt rolling over being taken up by higher tax and expenses.
And perhaps more importantly at this stage, the outlook. Maria Ramos, the CEO, pointing to a very tough outlook for the second half.
Yeah, I guess, I think the market's maybe still a bit optimistic on the banks. At the start of today, consensus earnings for ABSA were up about 17%. They're down 3% at the half, which means they'd have to do 40% in the second half to match the full year numbers. And yeah, reading that prospect statement, it didn't sound like a company that's going to do 40% growth in the second half.
Doesn't that beg the question, and if you look at the big four banks, that these banks have run too hard and that earnings aren't going to substantiate these valuations?
They do look quite expensive on a PE basis, so it does look like the market is expecting the earnings to come through, and as I said, those earnings seem to be disappointing. So we do think the banks and a lot of the other cyclicals have run quite hard. On a price to book, they look maybe a bit more attractive, but yeah, I think we would wait for better levels to get into the banks.
Sasol, and that trading update, headline earnings per share will be up 0 to 8% for the full year to the end of June. The stock is trading at 293 rand, up 1.75% on the back of those numbers. And I come back to a discussion point that we've had for a long time here on Business Tonight, is that if you're looking for value in the top 40, then Sasol could be one of those plays that you need to pick up.
Correct. We think Sasol offers value at these levels. A very sort of broad rule of thumb is Sasol's often trades on a forward P of about 10. The earnings which they're guiding to now are sort of between 25, 26 rand. And next year, most of the analysts are looking at a range from 29 to about 32 rand a share. On that basis, you could have a 320 rand share price next year if those earnings obviously come through. But it's quite a nice play on the rand oil price, and either the rand is weakening or oil price is going up, so you have a bit of a tailwind. But hopefully they can get the Synfuels production up. That's been quite a big sort of weighing on the Sasol share price, has been the very poor production at the Synfuels level.
Having just spoken to Tatenda from Frost & Sullivan, I put the question over Pat Davies' successor to him. Market doesn't like uncertainty. Pat has announced that he is looking to retire. The board asked him to stay on for another year. Doesn't it raise questions about succession planning as to whether we see an appropriate replacement for Pat Davies coming to the fore?
I think succession planning in South Africa in general is very poor. We've seen it at a couple of companies. There's a tussle for the CEO. There's a couple of candidates put forward. The guys who don't get it then leave the firm, and that intellectual capital or intellectual property is actually lost. So it is a concern around, I guess, Sasol as well. And at some point they're going to have to obviously make a decision on who's going to replace him.
Yesterday on Closing Bell, speaking to Sam Hooley, Head of Equities at Investec Asset Management, and we were exploring the theme around his exposure to the furniture retailers, the likes of JD Group, and he's exposed to Ellerins through African Bank. But he's shunned the general retailers, which have all run around about 30 to 40% since the beginning of this year, certainly among the top performers. What is your view on the retail space?
I guess I tend to agree with Sam that the sort of clothing retailers have run considerably harder than the furniture retailers, but we're still not that keen on the furniture space. If we look at the ABLE sort of 9-month update out today, positive signs coming through from Ellerins, but the base is so low, so you'd expect some kind of increase to be shown. So yes, they offer more value than the other retailers, but still not an area that we like.
We've had a number of questions from viewers coming through. Are we going to see 30,000 on the JSE all share in the short term? And I know you're not about forecasting, you are long-term investors. Do you think, though, there is potentially more upside, even though we are looking at the market pretty much fair value, according to a number of different market commentators? You
had quite a big rally, in July, sort of the risk on trade, and everyone sort of chasing high-risk assets again. And I guess if that continues, you may see 30,000. But on a fundamental basis, it's quite hard to justify the market holding on to those kind of levels. You can buy stocks like Coca-Cola, Microsoft, Johnson & Johnson in the US on P is lower now, considerably lower than the South African market. And a lot of those companies that I've mentioned are maybe based in the US, but have very strong emerging market exposure, so they would be exposed to growth as well.
If you look to the international arena, the risk obviously to our numbers, to our GDP forecasts, lies with what happens on the international front, whether we see this double-dip recession unfolding or not. Are you leaning to the positive with the recent set of data flow?
I think there's probably a bit too much debate around the double-dip scenario, because I think it sort of obscures the fact that growth globally is slowing. So whether we actually get a double dip or not, growth is actually slowing, and I think we'll see that reflected in South Africa. We tended to lag the rest of the world in the first recession, and I think we'll probably lag them as well. So we've seen the US GDP numbers not strong earlier this week, and I think our sort of numbers in the third quarter of this year will start to show that as well.
The strong rand, how does that affect your investment strategy at the moment? It looks as though rand strength is here to stay by all accounts. The carry trade is firmly in play, and we are looking at these strong foreign inflows. We did have news out from the ANC saying that they've got a suggestion around this short-term, or a tax on short-term capital inflows. Both economists that I've spoken to today don't think that that's a good idea at all. But the strong rand and how that impacts your investment strategy?
We generally try not to make a point forecast for the rand, but we do think that as it starts to approach 720 and 7 rand, that it is quite expensive. And if it starts to breach those key levels, then we will look to take a bigger exposure to sort of foreign currencies or companies that have foreign earnings coming through.
And Johnny, just very quickly before we go, looking at your top play, if you're wanting value at the moment on the JSE All Share, is there something that you can throw forward to?
We've had quite a big rally in junk bonds in the US, which almost bankrupted Mutual sort of a couple of months ago. We've had a tremendous rally in those bonds. Mutual reports on Friday. I think Mutual still is trading at about a 20-30% discount to embedded value, so there's a bit of value to be had in that space. And also in the gold stocks as well. We see gold breaking 1,200 today as well. We think there's value in gold as well at these levels.
And on that appropriate point, because we're looking at the gold quarterlies next week, and we're going to throw forward to that in just a moment. Johnny, appreciate your time.